Hello and good afternoon. I welcome you to today's Trading Spotlight webinar here together with Admiral Markets. My name is Klatt, and today the topic is what can a trader learn from golf players? At first glance, that may surprise as a topic, but I assure you that it's a very, very fascinating topic, in fact. And I can already say it right at the start. I'm not a golf player myself, so I've never played golf before. But in serious discussions, respectively talks with professional traders, I know, in fact, several traders who are playing golf, not professionally, but they play golf. And they said several times that there are many, many very interesting parallels between golf and trading, in fact. And today we want to take a look at what are these parallels, and in fact what we can learn from golf players here in this context. So today's agenda is quite straightforward. First of all, we want to show the parallels between golf and trading, introduce them, and then we will see that golf is in fact mainly a mental game. So I'm not sure, probably you can write it down in the chat box. Probably you're now watching this video here on YouTube, the recording. Then please feel free to use the chat box and write if you agree with the upcoming parallels we draw here between traders and golf. Probably you are a golf player, and would be kind of interesting to hear whether that makes sense to you. And then this is something you would also say that it's true that golf is in fact a mental game. And we will also want to shine a light on the emotions in golf. And then we want to build a bridge towards trading. And it's not just that we want to point out the parallels between golf and trading, but what we want to really do is to find a way to improve our trading based on this knowledge, in fact. And therefore we want to use a concept which is known as Yerkes-Dodson. In fact, it's a concept which is a psychology based, or it's from the psychology, in fact. And here the concept of the zone, we several times during our trading psychology webinars, also here within this Trading Spotlight webinar series, we digged already into this concept behind Yerkes-Dodson, and today we want to do this again. And then I will show you a concept which I use in my trading. So poker players probably will laugh now. So there's another parallel between poker and trading. If I say, well, when I go on tilt, it's not happening that often, but sometimes it happens. Yes, for example, yesterday it wasn't really tilt because I didn't overtrade, or there was no such thing as taking revenge on the market or something like that, but it was just annoying. So I trade the DAX mainly. That's one of my main traded markets, and that was just a price action, which is just not which is not optimal for my trading. And I was just annoyed. I was just looking at the screen and just like, oh my gosh, is it really necessary? So you get stopped at once again, and then the market spikes higher, spikes lower again, spikes higher again. So just look at the price action on M5 for the DAX yesterday, and we'll see exactly what I mean. And then you see me as a trader in the corner, sitting, just shaking the head, and then just looking at the chart in disbelief. And what I usually do then is I induce rationality. That's a technique I want to introduce to you today, and show you how you could probably stabilize your the mental aspects in your trading. In fact, before we start, first of all, here this is me. So my name is Jens. I'm located in Berlin, in Germany, and I'm in the financial industry now for nearly 20 years. So not really 20 years, but I'm close to be 20 years in this financial industry. Not the whole time in the trading industry / in the FX and CFD industry. Before I was an employee with a bank, and but what's probably most important, most interesting is I'm located in Berlin, in Germany. And why is this of importance? Because here Admiral Markets comes into play. Admiral Markets is a global financial service provider, and has offices around the globe, 20 offices around the globe, and one in Germany. So it's something like 20 to 30 minutes from my office to Admiral's. And there you can talk to someone in person, and this especially in your native language and in German, but obviously English is not such a big issue, but some people just prefer to talk especially in financial regards, to someone in their native language. And it's a very important aspect, which is especially interesting when looking at Admiral markets, with having 20 offices around the globe. And you can really be sure that you will very likely find someone talking to you in your native language, which is probably one reason why you finally should choose Admiral as your broker then, beside all the positive aspect when it comes to trading. So fast order execution, or very, very competitive offering in regards to spreads, stability in regards to spreads, liquidity in this case, good liquidity, good commissions, or great commissions, in fact. So here in Germany, for example, we refer to Admiral markets as the DAX expert, due to the probably most competitive offering in the FX, respectively CFD industry here when it comes to DAX trading. And just give Admiral a look, admiralmarkets.com, for further informations. And again, in addition to the very, very competitive trading environment you find there, you also have very likely someone speaking your native language. And so now we want to dig into today's topic. We want to point out, first of all, here the parallels between golf and trading, in fact. And as I already stated, I'm not playing golf myself, but over the years, again, I spoke to several professional traders and successful traders who do, in fact. And as I also already said, all agreed in one very fascinating point. To me, it was really fascinating because as someone who's never played golf before, to me, it's like, it's a sport. So I mean, that was my thinking before I dig deeper into this topic. But when looking, for example, at golf tournaments, which are also shown in TV, for example, you see how much work has to be done behind the scenes to really perform at your highest level here, to get a shot at the first prize in some major tournament, if you have a chance at all. And we're really talking about serious prize money, which you can win here. So someone, I for example, was all the time and every time I was fascinated to learn that Tiger Woods was one of the best earning sports athletes out there. And I was just like, okay, is it really true? Can it be true that someone makes so much money with playing golf? And yeah, it's true. Yes, it's true. And that means that there's obviously some high work or hard work which has to be done to become successful, because usually, as in trading, only the best survive, let's say, and then only the best make it to the top, and only the best really make money in a region, or are profitable in ways we could never have dreamed of before we became professionals, before we became professional traders, and then also golf players. But let's come back to golf. So I was all the time very fascinated here to learn that these traders said that golf has many aspects here in regards to trading, and I talked to several who also agreed on the statement then that they said, well, when I see someone playing golf, I can tell you by nearly 100% accuracy whether this person is a good trader, would be a good trader if he trades or not. And that's in fact very fascinating, and we will see that it's might be true. So there's there's definitely a reason to really believe that this is the case. And these professional traders, they came to the conclusion that after realizing that success in golf, as in trading, comes down to two key aspects, in fact. So this is the two key aspects. Based on these observations from them, they came to the conclusion that there must be this connection between behavior, let's say, in golf and the way you play golf, and then the behavior when it comes to trading. So as I already stated, golf, as in trading, or as trading, is a mental game. And in golf, as in trading, managing your emotions decides whether you're successful or not. So it's not uncommon to refer to trading as a profession where success is directly correlated, positively correlated, towards mental stability. And trading, there are several people out there saying that trading is 100% psychology. So I disagree to some extent extent, because I'd say most of success in trading is certainly related to mental stability. But let's face it, I mean, you can be as mentally stable as you want. If you do not have a profitable trading strategy, if you do not have an edge in the markets, if you don't know how to capitalize on that edge due to a risk and money management, adequate risk and money management plan, well, you can, be as stable from a mental perspective as you want. You will never succeed in trading. So it's more than the psychological column, but I'd say it's 3 columns. It's risk, money management, it's trading with an edge, trading with a profitable trading strategy, and the third column then is psychology, even though the weight of this third column, trading psychology, is probably higher than the one trading with an edge, respectively, risk and money management. So, and now let's have a look here at the point where we say that golf is a mental game. So first of all, as I already said, for someone not playing golf, as in my case, for example, this becomes obvious at a second glance. So first, I was fascinated. I was irritated and was fascinated, and then I wanted to learn more about that. And we want to point out now several aspects of playing golf here, which you might find also in your trading, probably have already found in your trading, in fact. So first, a fact, golf is a single sport. So this is meaning you're not playing within a team, or you do not have team members, but you're standing as a player, you're standing alone on the green, competing against yourself in the first place. So that is one of the obvious parallels between golf players and in a case of trading or traders. And for every, let's call it, non-optimal or warped shot. So, and in my case, if I play golf for the first time, I could imagine there will be several of these. The golf player must take full responsibility, in fact. And just like a trader, you have to take responsibility for your failures in this case. And in case of trading, you have to take full responsibility for a losing trade. I mean, certainly you could now say, well, I was stopped there because some central banker said something in regards to the euro, and that's why we spiked higher, we spiked lower. I was stopped out, and afterwards we saw that this had no serious impact on the overall market, but I was stopped out of my favorable or my currently profitable trade. But in the long run, it might be clear, or it should be clear, that it's not one trade which tells whether you're profitable and making money in your trading, but it's all trades combined which decide. And so that said, let's come back to the example from yesterday, which I just said at the beginning, when I was getting a little frustrated about the price action. In the overall context, this day yesterday was just one out of over 200 within a year of trading. So I trade every day, and it doesn't really matter whether I was stopped out of 2-3 trades yesterday, or if I wasn't stopped out. But it's just, well, it's just business, and it's just one day. And to be honest, if I hadn't talked about this right here now, I probably would have already forgotten it, in fact, because today everything's working out quite well again. So today I'm on the right side of variance. Let's just hope that the market, in that case of the DAX, continues to trade lower, and I will continue to profit from this run on the downside. But the thing is that this is quite common, in fact, that traders say that they find themselves in a stopped out trade, or they find themselves in a trade which is then stopped out, and then they try to find a reason why they were stopped out. And it was not just because it's part of the game, it was variance, bad variance, or let's put it a little more direct, if they got a margin call because they did not set a stop. Well, who could have known that the market continues to drop lower after I averaged down and it doubled down and pyramid into the losing trade, for example? Well, first of all, you completely lost the control of your trade once you started to average your losing trade, and you haven't put a stop loss in first place. So I mean, certainly you could now argue, but there were certain or several reasons for the market to rise here. But in first place, you were responsible for averaging a losing trade, for example. And this is it's quite interesting, in fact, that after several years now in this industry, I come across these characters over and over and over again. And it's the same in golf then. So if you stand with this guy on a green field, there would be, I don't know, there would be a wind coming or something like that. This is like, I put it here in the next point. It's the chef in golf. The chef is separated from the weed when it comes to take responsibility. Is the wind the reason for the suboptimal trajectory, or the ball, or the cooing suboptimal trajectory of the ball, or is it the cooing of a pigeon, for example, whatever? Or is it just because you're not prepared? If it's because you're not focused, I mean, and this is something you can control. You can't control whether the a pigeon will coo you or something. You just can't. But what you can control is your mental stability, whether you're found a good sleep the night before, whether you ate well, whatever, whether you I don't know, what can we say? Whether you worked out and try to position yourself in your zone when standing in on the green field, respectively sitting in front of your screen and trading. So there's this is where, again, where the chaff is separated from the wheat. So those complaining are not those who will succeed in the long run, but it will be those who take the right steps to take responsibility, or to take responsibility for their failure, find ways to avoid this in the future, in fact. And so golf players are also very ambitious. This is also a parallel between golf and trading. So you probably have heard about golf players. What they usually do is, for each hole, they have a so-called par, which defines the number of strokes that a very good player, someone who plays handicap 10, or handicap 0, I'm sorry, which such a player takes on average to play the ball from the tee into the hole. And this par is the golf player's S&P 500, our benchmark when it comes to find out whether our performance was well or whether it wasn't well. And so in this, I'm sorry, one second. So, and this is what makes golf players, successful golf players, hard and consistent workers, trying to influence what they can and improve here, being disciplined and consistent. And this is exact the same thing when it comes to trading. And now I prepared something which I have to show you here. This is the next slide. Unfortunately, it didn't work out so well here in the environment I prepared, so I have to take it from another slide, but you will see it now. And this is a small video. It's 30 seconds. I won't say anything, but just look at the video and try not to laugh. That's the first thing. And then try to find yourself here in this example, in this video, and try to imagine yourself sitting in front of your screen. And then I think it becomes quite obvious where the parallels between trading and golf come into play here. So just look at the video, and 30 seconds, I won't say anything. We just watch it, and then we'll continue with the presentation. So there we go. Finally. Okay, so there we go. So now, emotions in golf. I think the video itself it was quite obvious, and just think about yourself. Have you seen yourself in front of a screen? Just imagine you sit in front of a screen, and then you're you're just leaving your body and standing right beside you, next to you, and looking at you when you're trading. Have you ever behaved that way, in such an irrational way, in whatever trade you might have taken? I bet you have. And I can also say, I can easily say that. I mean, it's years ago, but that has been the case for me too. And sometimes there were complete breakdowns. Sometimes I was completely exhausted. And we're not talking about big financial losses, in fact, but it's more, in my case, it was more kind of an ego. So if someone asks me, for example, why do you trade, Jens? For me, trading is a mental game, and especially a game where I can see how good I am to manage myself, how good am I to discipline myself. And it's also a game of competition against others. So I want to outperform others. This is also something you probably remember. Several weeks ago, we had a webinar, Trading Spotlight webinar, and then we pointed out the parallels between traders and athletes. So being competitive is also something which is quite common among traders, in fact. So if I say I have a complete breakdown, I had to find out myself why I was so not exhausted, or exhausted is probably also a good way to put it, but why I was so frustrated was because I found out afterwards, then after realizing who am I, and based on that, find my way to trade and make my way in the markets. And as a trader, I found out that I was frustrated because I was just disappointed about myself. Some people might not be disappointed about themselves, but they're probably disappointed because of losing money. But it all comes down to getting really, really emotional and having these breakdowns, these mental breakdowns, which obviously do not make sense. I don't know which player it was, but I could imagine this guy to know quite well about golf and how to play golf. And it's not that he completely forgot how to play professional golf, but it was the emotions taking over here and leaving him completely alone in a state where he was completely going berserk, let's say. And so in this context now, this is the question. Did you see yourself here after a losing trade or a streak of losing trades? If this is the case, it's not a problem at all, because now you probably might say, okay, obviously I'm not alone here. It's not that traders talk about this a lot. So, and this is probably one of the reasons why many fail in the long run, then, because there's no one out there who's honest here. So who's saying honestly, yes, I know how you feel, and I know how to overcome this, in fact. So emotions are something, or feelings are usually something which traders usually do not talk a lot about. That's probably also one of the reasons why women especially are probably better traders than men. So there's some statistics showing exactly that. It's not that women are not emotional, but they're talking about the emotions way more than men, who are usually just talking to themselves, if at all, and try to overcome this by however. So the thing is, again, if you found yourself now sitting in front of a screen here, and you say, well, this is something I can perfectly connect with. It's not a bad thing, but probably what we are now talking about, what I will introduce to you, is probably a first step to overcome this. Beside the fact that I highly recommend you to sit down and write down your feelings from now on, and analyze them and really face them, and talk about them also. You can talk about them with a good friend, with your wife, whoever, but I only recommend talk about them, because it's very important to get to know yourself better, find out what's your motivation behind trading, and then use this in combination with the question, what does a good trader do? Or what I do right here, is this what a good trader does? Let's put it that way. If the answer to this question is no, well, then you have to find ways to make sure that the answer to this question is all the time a yes. That's quite simple, in fact. So let's come back to the emotions involved. So a trade not going well here, driven by negative emotions, you literally let yourself go, completely freaking out. That's usually what you do. And if this happens again, it's common, it's usual, it's especially usual if you're not mentally stable. There's also a behavior which you probably found yourself in. The way to behave is in a devastating series here of revenge trades, for example, where nothing mattered anymore and you only wanted to take vanagons on the market for your losing trade. So that's also something which is devastating for a trading account, in fact. So I could tell you a story where I lost nearly half of my account, which I built steadily over what was it? It was 6 months or something like that. The problem with that was I felt I felt like there was no better trader than me. So that was right at the beginning of my trading career. There was a series of winning trades. I won and I won and I won, and I was on the right side of variance for quite an extended period of time. And 6 months in a row, I was never losing money. So there were losing trades, but this was small compared to the big winners. And it was just on the right side of variance. And then there was 1 week. There was 1 week where I was on the wrong side of variance. The only problem was at the beginning of my trading career, and only seeing a series of winning trades, and making that feeling completely normal. The problem is, you will see that once you then lose, you don't know how to deal with this. And not knowing how to lose is, in fact, devastating to your trading account, because emotions start to build and you feel completely helpless. And that was something I found out later on then. I was completely helpless. There was a losing trade. I was like, okay, well, 1 losing trade, fine. The next losing trade, okay, now we have 2. That's uncommon. It happened in the past, yes, but it was 1 R and 1 R, and before that 6 months I never really had a 1 R losing trade. It was a losing trade because the market just did not move. It was a volatile market environment or something like that. And then it continued and it continued, and I kept on trading and kept on trading. Was just like, that can be, and I continued to trade and continued to trade, and was just like I had to take revenge on the market. And after half of my account was wiped out, I didn't lose all. I didn't lose all of my gains of the half 6 months before, but I lost half of the account I was steadily building up, and that was my first massive mental breakdown, when I just was like I was completely losing it, in fact. And during this series, when I kept on trading, that was like me sitting in front of a screen trying to take revenge, and very similar to what we just saw with the golf player, in fact, just for whatever reason. Probably I was a queen pigeon, I don't know. But the thing is that you probably have found yourself within this period. And this is then again where there's 2 ways. First is you're probably losing half of your account. In my case, was half of the account. Some people lose their whole account, and they just say, okay, trading is not my business. I have to leave. I just leave trading as it is. Probably you will be confronted with this rather soon later, somewhere in the future, booking a webinar, a seminar, whatever, just listening to someone where you think this is an interesting topic to listen to, but you do not have a connection to trading anymore. And then that's the path I followed. It was like, okay, there has to be something more. After I calmed down, it took a while. In fact, I closed out the account. I took all the money I made, I put it in my bank account, and I was taking a break for 4 weeks. I was going on vacation with my ex-girlfriend back then. I was completely separating from trading, which I did here half a year, every day and every hour. Even when markets were closed, I was still reading a book on trading and everything. And I was completely separating from there. And after that, I took momentum on again, and I just wondered about myself, my behavior, because I was not used to myself seeing myself as just such an emotional state, in fact. And that was then the moment when I started to question my motivation behind trading. Why do I do trade? Why do I behave the way I did? And this is where I then took on momentum again and built my trading account back again. I took the money, redeposited, and then started to build the account again. But it was a process. So it was a process, and that's also one of the reasons why I think it's nothing, it's not nice, but it's something you have to go through this, and you have to feel this, because these emotions which are attached to these how can I say that, experiences in the market, they are something you will never forget. So, for example, when I contacted my biggest losing trade, that was during an interview I did with Admiral Markets when we started this Trading Spotlight webinar series here. I was talking about a trade I still remember today, because the pain I connect with this losing trade was so big. I never forgot this, and I never ever entered the market unprepared again and without a stop and not knowing what I'm doing. But that was the, let's call it, turning point probably. And so the thing is, again, let's come back to the presentation. So what was the result of this trade once you took revenge? Was your account seriously decimated? As I already said, it's very likely that it was. In my case, it definitely was. And once you woke up, there's also something, it was waking up weeks ago, probably. I asked myself here, oh my God, what just happened? So what have I done to my account? What have I done to my probably relationship? I don't know. And this is what happens when you lose your ability to control your emotions. What we do is then we only harm our results. And the emotional stress here results out of monetary reasons, but also ego reasons, as I already said, driven by competitive thinking then, and the ambition that goes with it, just like in trading. So I'm just jumping from golf to trading, from trading to golf, back again. But I think the video perfectly illustrated what I'm talking about. And now let's come here to the emotions. The thing is, now you might probably come to the conclusion that you say, well, don't let emotions be part of your trading. And I completely agree with this statement, even though I have to say, no, I don't agree. I know what you mean if you say, don't let emotions be part of your trading. I know what you're talking about. I know what in presentations, when traders at seminars talk about this, what they want to say. But I have to disagree, because emotions are a crucial part, in fact, of your being, of you being a human being. So it's not possible to leave emotions completely out of trading, because you're not a computer. You're still a human being, but you have to understand what are good and what are bad emotions. And this is now where this Yerkes-Dodson and the zone concept comes into play. So first of all, as I already stated, emotions are crucial for your trading performance. And emotions, again, question mark, yes, the Yerkes-Dodson model here, in fact, delivers the answer. You have to support positive emotions, and you have to try to reduce the impact of negative emotions, and that way reach your zone. What is this zone? Well, therefore, let's have a look at this illustration. So you have the Yerkes-Dodson model, and what you see here on the left, the y-axis is the performance, so your mental performance, or your performance in general. And here you have on the x-axis, you have the arousal from low to high, in fact. And now what Yerkes-Dodson delivers is, in fact, that you see, to reach this optimal arousal, this zone, the moment you perform optimal, you have to see an increased attention and interest in something. You have to, let's put it in an athlete way, you have to warm up. So you can compare this here by looking at a soccer player, for example. So there's no professional soccer player. You probably you've seen it on TV. So people, or these athletes, they usually warm up. It's not that they can't play anymore, that they have to warm up to be capable of, I don't know, scoring, or yeah, whatever. But it's because they want to avoid of getting hurt. This is the avoidance of getting hurt, in fact. And they have to get to a certain point where they can optimally perform. That's one of the reasons, for example, I usually use this as an example. When looking at goalkeepers, for example, looking at someone like the German goalkeeper, Manuel Neuer, you probably heard about him. That was the, probably the best player of the World Championship in soccer in 2014, in fact. And what was fascinating, what is fascinating, is to see him perform well. I mean, he's still the goalkeeper of Bayern Munich. It's probably right now the best soccer club in the world. And so there's no really the team they are playing, they're competing against. So if Bayern Munich is playing against whatever club out there, you probably might say there's no really a chance for the competition here to score. But still, he has to keep a high level of attention, in fact, and keep himself warmed up the whole game to be capable to save Bayern Munich to lose a game if it's probably 0-0 or 1-0, something like that. It's a close game, but there's no really chance for the competition here to score. And so what he achieves, and this is where his world class comes into play, is he's capable of holding this red ellipse here, this optimal arousal, this zone, for an extended period of time, something like 100 minutes in a row, in fact. And this is the same in trading. So you have to warm up, you have to keep yourself within this region here, but then you have to avoid to get too emotional, and here to drop down on the right side of this graph here in this case, and to be stressed or stressed out, in fact. So this is where impaired performance because of strong anxiety, for example, comes into play. This is the moment you can connect it with, for example, when you trade too big. If you trade too big, it's usually connected directly to stress, because you say to yourself, right, even probably before you enter the trade, I can't really lose that amount of money, but the chances are so attractive, I have to take the trade here and to over leverage the position. And this is the moment when you, when you're getting anxious, and where you just are, where you're scared, we're really scared to lose the trade here, because it would mean a substantial loss of money in relation to your account. And so what you have to avoid under all circumstances is, in fact, to drop here on the right down and find yourself in a very stressful and thus emotional environment. And so what I mean if I talk about good and bad emotions is that I say, well, good emotions are those who bring you here up to this optimal arousal, your zone. For example, warming up in the morning, knowing your daily routine, having a strong black coffee, I don't know, work out, go for a walk, take a cold shower, whatever you need here to bring good emotions in your mind, or to be under good emotions, let's say, and avoid then that once you're trading, you're dropping here to the right. What you try to do is, in fact, to find yourself all the time here within this red ellipse, in fact. So if there's a fear that you're probably losing focus and that you're not feeling really well to trade today anymore, and you're losing motivation, then you have to find ways, have a black coffee, for example, to push yourself back into this zone. Once you feel that you're probably trading too big and that you're getting emotional and stress starts to build up, you have to reduce your position size, for example, and then push yourself back into the zone. And this is the stadium here, you are the state you have to try to stay in over the whole day of trading, in fact. And this is where Yerkes-Dodson comes into play, and how you can interpret this, and how you can also understand that emotions are crucial in your trading, even though the good ones are crucial, and you need them to build here enough attention, interest, motivation to find yourself within this red ellipse in this zone. Well, you have to avoid under all circumstances here negative emotions resulting out of too big position size, over leverage trading, and so on. So now the thing is, do you feel about to explode? Okay, we connect this especially. So I'm not talking about good emotions and how to build enough tension here and reach your zone by having a black coffee or something like that. But we are talking about the most common way of being affected negatively by emotions, by feeling I'm about to explode. I have a series of losing trades, and there's 5 steps here you can take, in fact, and which are working quite well for me. So this is my routine, in fact. You can adopt it if you want. If you want to use it, feel free to use it. The thing is that it can be, or no, it's not, it can be, but it's like it's definitely the case. What we're talking about here is very, very individual. So I just can't say that works for you too. Like the black coffee in the morning, bringing yourself to the state you need to perform optimal. Some people say, if I drink a coffee, I'm completely completely blacking out. So the same is true for people who say, I have to work out, for example, in the morning, and I have to go for a walk, or I have to work out in the gym or whatever. Some people might say, well, if I have to work out in the gym, I have to get up at 6 a.m. I feel completely exhausted because I had the day before, I had to work till, let's say, 10 p.m. or something. I was at home at 11. And then I have to work out. I'm not well trained right now, which means I'm probably completely exhausted, not just completely tired, but also exhausted and can't perform well then anymore. Someone who knows that about himself probably has to find other ways to get to the point of the optimal arousal into his zone then here. The same is also true for the techniques to avoid that you're about to explode. While some people have to take a deep breath and it's enough and they can stay in front of their screen, some of them probably have to say, okay, I have to shut it down and I have to leave the office and I have to go for a walk. And after 1 hour, I return and everything's fine again. So that's very, very individual. But let's go through these 5 steps here. And then hopefully this is a technique I refer to as inducing rationality, which will hopefully help you to stay mentally stable, in fact, and overcome short-term mental instabilities in your trading. So first of all, the awareness or realize that there's a problem. Okay, so even though you know about the profitability of your trading approach, you realize a mental instability. It starts to seethe inside, let's say. So let's put this at the example from yesterday. I know I'm still trading the approaches. I know they're still profitable. I have one strategy which is currently not performing really well. I have 2, 3 others which overcompensate for the losses. All of them lost. So in case of the currently losing strategy, not finding itself in a good profitable environment, okay, that's okay, part of the game because it's just not the right environment. But the other strategies are profitable. And I was frustrated about these getting stopped out too. So I know about the profitability, but still I feel mentally unstable then. That was, in fact, the second step I took was taking a deep breath. I was just taking a deep breath, and what you get then, so the idea behind this is you get a short-term interruption here from your emotion. And this is like when driving a car, for example. So you're engaging the clutch and you change gears. That's the same concept behind this. So taking a deep breath is quite common, but probably people are not really aware of why this is so helpful also when it comes to emotions in your trading. So taking a deep breath, then you start to induce rationality. That means we look at the facts. We just look at the facts. Did you make a mistake? Did you make a mistake? Or in my case, did I make a mistake here while trading the plan? Answer, no, I didn't. I just followed the plan. I had an entry point. I have an exit or take profit. I have a stop loss. I just followed the rules. So no, there was no mistake. And how often did similar winning losing streaks occurred in the past? It's a very fascinating question. In fact, I find myself currently in a drawdown, but it's just 2 or 3 trades which were stopped out. It's not that it's a series of 15 trades which got stopped out, which is, if I run a simulation here, also quite common given the input parameters based on the hit rate and also based on the payoff ratio, but especially the hit rate. So what I talk about here is very simple. If you don't know what you're doing, you have no other chance than to become emotional. So to get through these steps, to go through these steps here, it's important that you know what are the key parameters of my strategy. If I know these key parameters, if I know that I have a hit rate between something like 48 to 50%, depending on market circumstances, I can show via a simple Monte Carlo simulation, for example, I can show that it's quite common here that there will be series. I'm not saying it's fine, it's a great feeling, no, but it's mathematically inevitable. There will be a series of 15, 20 losing trades in a row. It just happens. And So that means that if you do not know what you're doing, you have no other chance than to become emotional. While if you know what you're doing, if you know about the key parameters in your strategy, chances are very good that you can here induce rationality and say, okay, these losing streaks occur. They naturally occur, and that's why I'm not getting overly emotional here about this. It feels bad. It's a pain here to see the trade losing, but okay, it's part of the game. I have to deal with that. And what we then do here is, in case of a losing trade, we induce rationality, for example, in a way when we say a losing trade is just part of the trading business. It's the price we have to pay to be able to take a next chance. Just imagine you're not getting stopped out, seeing the market continue to move against you. That means that not realizing the loss here is resulting in a deep loss, in a deep hole in your trading account, and you're losing lots of money. And in the worst case scenario, you're losing your account. If you lose your account, you can't trade anymore. So if I'm getting stopped out, it's okay. It's painful. Yes, it's not a nice feeling. It's part of the game, and it's the price I have to pay to stay in business, and it's the price I have to take for the next chance. And the next step is then the fourth one is a quite technical one. So I answer again the question, how does my trading strategy look like? This is a purely technical aspect, and you look at the key components of your trading. For example, what's the idea of your trading strategy? Capitalizing on trends, for example. Well, we find ourselves in a range environment. Obviously, trend strategies are probably currently not performing well, for example. And this is then resulting in the question, okay, what's the entry, what's the exit logic of my trade? I remember myself, and this should usually already get some positive effects on your overall emotional state, because you then start to calm down. If not, repeat. If necessary, repeat again and start again. I'm aware of the problem. There is a problem. And then you walk through these steps again. And this is how the concept of inducing rationality works, and how you can avoid getting emotional. And probably one concept which would have saved this guy here from, I don't know, having 5 or 6 shots here finally to get the ball into the hole. So let's sum all this up. So golf and trading share many parallels, since in both disciplines, emotion play a very important role. And managing emotions is key to long-term success in both golf and trading. Thus, understanding the Yerkes-Dodson model may help out here. So once you understand the model here, why emotions are crucial to your overall success in trading. And a short-term solution then here might be to provide or to use the technique of inducing rationality via the steps I just introduced here. So becoming aware of the problem, take a deep breath. It's like engaging the clutch and changing gears in a car. When driving a car, you induce rationality based on the key parameters of your strategy. Once you know why you're trading, what you're trading, and what are the key parameters, you ask yourself the question, simple questions. Did I follow the plan? And did I just wake up on the wrong side of variance? You then look at the strategy. You wonder, well, is the current market environment favorable for my strategy or not? Trend following approaches, for example, do usually not work well during ranging trading conditions. The same is true the other way around. If you're a range trader, well, trending conditions are not very favorable for you. And then if you haven't calmed down till then, you just repeat this procedure and go through this over and over and over again. So next webinar will be on Monday together with Paul, and he will talk to you about the question on how to debrief your trading to improve your performance, and including why it's important to debrief your trading, how can you do it successfully, and how do you make the changes necessary. So a very interesting topic, in fact. And time will be Monday, 2 p.m. London, 28th of September. If you're now here in the live event, then check your inbox for the registration link, or respectively for the link for the webinar. If you want to register, if you watch this video now on YouTube, please feel free to leave a comment behind. If you enjoyed what you just saw, give a thumb up. give us your feedback on the topics. Which topics do you like to hear then in the future? So we are very, very flexible, very open here. Just feel free to communicate your wishes, your feedback over to us. And if you watch this on YouTube, now we want to be live here within this event, then go to admiralmarkets.com. There is the tab Education, and there you'll find webinars, and there's the Trading Spotlight where you can register for free for this event. And further questions, you can also ask them here in our exclusive Trading Spotlight community, where you can also register for free, in fact. So it's tradersyard.com, and there's the /group/312. And Paul, Marcus, and I are usually there to answer your questions, to give ideas, to give trading setups for the day. And just come over and yeah, check us out, ask your questions, interact with us. We are there to help. Yeah, that's probably a fair way to put it. And further information is on admiralmarkets.com. These are the contact details, and here is the risk disclaimer. So that's it from my end. Let me just, oh, by the way, let me just see. Yeah, perfect. Okay. Yeah, Mark. See you. So Mark is, by the way, is here from Australia. So we are around the globe, as I already said at the beginning. So have a nice evening. Have a nice weekend. Enjoy yourself. Talk to you again next week on Friday. I look forward to hear from you, to see you, talk to you then. See you.